Today is an important one because we're going to look at the market that has settled with Bitcoin. Reason being, lots of people are obsessed with cryptocurrencies, and there's a couple of things which really come to mind for myself when you talk about that kind of thing, because there are many things that you can trade as a trader, and the allure that comes from cryptocurrencies, mostly for a lot of people, is the fact that they're HVAs and they have a tendency to, or they have at least in the past, move quite quickly. And that move allows any trader to move into the market and make money. But there are times, however, where that's not the case. Okay, and you see things like we're seeing now. Now, it's really important to note that this is no surprise. And what you can do is you can simply look back in the market to times where something similar has happened. Okay? And if you look how many times it's happened, it reveals something interesting. Because you can just see, with every leg down in the market, there's a really boring piece of price action prevailing it. Okay, so preceding it. So this goes on for a very long time. And it's just because this is losing that valuable sentiment. Okay, in other words, people aren't interested in it. Now, when they're not interested in it, the volume goes down and people stop trading it. And that's important because you need to decide, what am I going to trade instead? How am I going to trade instead? Or how can I change things? Now, you've got two options. Number one, of course, is to just stop trading crypto or Bitcoin and stuff like that. Okay, that's a good option. I think even if you're learning to trade, you shouldn't be doing it on cryptocurrency anyway. That's just me. I didn't learn to trade on crypto because it's harder to trade. Essentially, when you have massive moves all at once, that aren't so frequent on other assets, like major currency pairs, for example, you're not going to get those wild swings. So number one is just to decide, okay, well, I'm not going to trade this because nothing's going on. And number two is to scalp it and be a scalp trader. Now, if you drop your time frames way down, let's go to the hourly and let's get rid of these massive new bubbles that have arrived. You can see that, for example, this is scalpable. Okay, in other words, you can get in and out on this over and over again. So the way you would do that is by firstly noting where you have price action levels. So I'm going to draw those with my lines. In other words, where people are in and out of the market and where you should be as well, by using your trader's eye you now have after watching my videos, I would hope. Okay, like so. And you'd be trading this small because you're not interested in a massive move. You know there's not much movement going on, so you're really not concerned, and you're happy for this to just go dilly-dally all day long. It doesn't concern you because that is not the way you're trading. So you're adjusting what you're doing here, guys. Okay, now if you trade these things side to side, and it's not just this period of price action, you'll find that you start to accumulate gains. Okay, and over time you rack up profit. But you're not going to trade large because eventually this stops. And we either have a leg down, as you've seen numerous times before, based on market sentiment being so poor. Okay. Or alternatively, you get a move up. Now, our job, and what I think is the better way to trade, and the point of this video essentially, is not to be looking for these two. Okay? Not when the market is slow. When the market's slow, you become a scalper and you trade really minutely and very small. And that allows you to accumulate profit whilst, and this is important, if you've DCA'd in previously and you have loss, this kind of thing can eradicate your losses that you accumulated. So you're basically just changing the way you're trading to fit market conditions because you have to. Otherwise, you'll sit there for weeks, months, and years waiting for something to happen. And if the market goes even further on your DCA move to the opposite side, for example, with this yellow arrow, you'll be losing more money for longer. So my point is, drop your size, trade smaller moves, okay, side to side for when you can, take the gains and eradicate previous losses. Okay, thanks for watching. See you in the next one.